Now, on the USOIL spot, we've had quite an interesting scenario here in the last 4 days now, as price action has been on a very strong bearish momentum. And in fact, we have been selling this asset as we rode the move all the way into the $78 level, which is my TP target, with a minimum of over 600 pips in profit on this one. So before we go into the details here, I would like us to run through how the week started and what really incited the idea of us selling this asset for this week. So at the beginning of the week, this was what we were able to spot here. Remember, we had our key level at the $81 area, while we saw price action oscillate around the key level to give us a flat channel to work with for the week. So we saw price confined within the $81.40 level and the $80.50 level to give us an insight into the level of indecision at that particular point in time. And with a flat channel here, you know how we do it in this community. We of course want to wait for price action to break out or break down of that range to give us an opportunity to buy or sell. Now, in addition to this observation was this key level, which was broken. And of course, I mentioned this on Monday, that if at any point in time price breaks down our key level and retest that structure, we want to be joining a bearish move. And you know how we do it. Once we have a key level identified on the chart and price drops below the key level, we want to be looking out for patterns and structures that will support the idea of selling that asset. Now, price broke down, retest that structure, and since that moment, we have been selling the USOIL spot. And in fact, we were able to capitalize and maximize the potential of that move by adding more positions as price action broke down of levels that we identified, such as the $80.50 level, the $80 level, and of course the $70.50 level. And yesterday we also added one more at $78.50 area, giving us over 600 pips in total on 1, 2, 3, 4, 5 positions here on the USOIL spot. And for those who had been part of this profitable journey, well done to you for being on standby to capitalize on this move. So by now, you must have been out of all the sell positions right now, as if you had moved your stop losses accordingly, definitely you should be out of these positions right now. So once again, congratulations to you. Now, going into the New York session today, what is going to be our plans for today? Are we going to continue to sell this asset, or are we going to be getting ready to buy? Well, before we go into the details here, I would like us to scale up into the higher time frame. Let's take a quick look at things from an holistic standpoint and see where things are going from a long-term perspective. So like I said here, we shall be scaling up into the 4 hours time frame, where I would like to refresh our memories as regards to what we saw here at the beginning of the week and what led into our decision making. So at the beginning of this week, we saw this bullish momentum on the 4 hours time frame, and in fact we took a step further to connect the series of higher lows here to emphasize the bullish momentum in this market. And in fact, we had a couple of trend lines here to emphasize this bullish momentum, as you will see here. So price action has been bullish in the last couple of months now, as you will see. Then in addition to that, to those trend lines we see here was this important level at the $78.50 area. Now, looking at the structure closely, you will see that since last month, this level had been a major buying niche for participants in this market. As you will see, at every point in time price comes into that area with the attempt of breaking through, we saw how sellers struggled to gain that momentum there as buyers came in at every point in time to negate the seller's attempt around this area, giving us clues that this area could be serving as a strong buying platform in this particular market. And if you look at what has been going on here in the last 24 hours, you will see that sellers are still struggling to break through that area, hereby leading into the emergence of buying pressure around that level. Now, one interesting thing about this key level at the $78.50 area is the fact that it also shares a confluence with that ascending trend line we identified earlier. And I told us all yesterday how important this confluence is, as it has a tendency of either pushing price to the downside and of course buyers to also have a potential of making price bullish from this point in time, considering the strong buying power around that area. Now, if we look at what has been going on here in the last 2 hours, 30 minutes or so, you will see that we have something like an engulfing candle at this point in time, which we cannot consider to be an engulfing because the candle still has about 1 hour, 30 minutes for it to close. It could still turn out to be a shooting star candle that will drop price to the downside. So we need to be very, very careful here. So at this point in time, you would agree with me that we are at a crucial moment in this particular market. That so in fact, anything that happens here was likely going to be dictating the pace for the later part of this week. So at this point, there are two ways to this. Continued buy pressure above the $78.50 level could likely secure a strong bullish momentum here. And if price goes on to break back down the $78.50 level, it's likely going to incite a sell-off. Now, if we look at the scenario here, we already have a breakdown of the $78.50 level, as you will see here. So it is quite advisable to have a sell stop order below the $78.50 level, especially for those who have been with us since the beginning of the week. You will be quite profitable on this asset, so we can still afford to leverage on the profit we had made so far to risk and test waters below the $78.50 level to capitalize on that bearish opportunity. So a sell stop order below the $78.50 level in anticipation of a sell-off seems most reasonable at this point in time. But that does not mean that we are going to ignore the potentials of buyers here. Remember, I laid emphasis on how buyers had continued to negate sellers' attempt around the zone since in the last couple of months now. And in that regard, we want to also consider how to take advantage of buying opportunity if that is going to be the case for the second half of the week, and also considering how our price action is currently around and above that ascending trend line we identified earlier. So in order for us to capitalize on this potential buying opportunity that we are seeing here, we shall be scaling down into the 1 hour time frame, where we shall be looking out for patterns and structures that will help us position ourselves for any potential bullish momentum. So with the information we have gathered here on the 4 hours time frame, when we scale down to the 1 hour time frame, things will now look a little bit much more clearer and simpler for us to comprehend. So now scaling down into the 1 hour time frame, something interesting is currently going on around this area. Now, one of the things I observed here, let me bring out my line chart. So we do want to be marking out the $78 zone. This is going to be a critical point in this market where we have been noticing some buy pressure in the last 12 hours or so. Hold on a second. You do want to be marking out these levels on your chart right now. So the first one here is the $78 mark. As you will see, we have the first touch. We saw the sharp rejection of that area, giving us something that looks like a hammer candle. And from a technical standpoint, this is a very good sign that buyers are likely going to be pushing price to the upside here. And since the early hours of today, we have seen how sellers have found it difficult to break through that area, as we have finally found higher lows around this juncture, giving us further emphasizing the strength of buyers around that point. Now, with the way things are going right now, it appears that we have a potential reversal pattern looking more like a triple bottom structure, which from a technical standpoint is a strong reversal pattern. And you know how we do it in this community. When we begin to see the potential transition of price action into a reversal pattern, the next thing we want to be doing is to identify a neckline which we shall be using to validate the potency of that reversal pattern. Now, if we bring out our line chart so that we can have a precise point of neckline, you will see that we have something around the $79 area, another psychological level considering the round figure of that price. So we do want to be marking out the $79 level on our chart right now, as we shall be using this as a reference point to guide our trading activities for today. So here we go now. Let's bring back our candle chart, and we have something here to work with for today. So now if the buy pressure that resumed around the $78 is going to persist here, then a breakout retest of the neckline at the $79 area will be what we are looking out for to join a bullish momentum. So what we're going to be looking out for simply here is a breakout retest of the $79 area to join an uptrend continuation at this point. Remember that this market still remains bullish from an holistic standpoint. Hence, if we begin to see any reversal pattern, especially around that $78.50 level we identified on the higher time frame, then it makes quite a lot of sense to start thinking of buying this asset. So anywhere above the $79 area seems most appropriate to position ourselves for buying opportunity. Now, for those who have been profitable, those who have been part of this profitable journey since the beginning of the week, you can afford to leverage on the profit you had made so far this week to test waters around above the $79 area. So having a buy stop order above the $79 level seems most appropriate at this point in time. So having a buy stop order is good. However, if you are joining us for the first time and this is your first position, then you want to be looking out for a retest of structure before jumping into a position here. So these are my views here on the USOIL spot. Let's position ourselves above the $79 area to buy the USOIL spot for today. So I would like to label this buy, breakout, and retest. So let's see how the market will play out from this current juncture. Then we also have more levels here that could give us the privilege of joining multiple entries here. We have levels like the $79.50, we have the $80 MAC, we have the $80.50 area, and of course we have the $81 area if price action goes on to break out and retest these levels. We want to be adding more buy positions, hereby maximizing the potential of that bullish move. However, in as much as we're looking out for buying opportunity here, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. So if we are going to start considering selling at this point in time after considering the long-term bearish momentum that started this week, then I want to be looking forward to a breakout, taking out all these buy positions along the $78 area for me to start considering selling at this point in time. So I would rather see price slice through the $78 level for me to consider a downtrend continuation. So if this does not happen, I am not going to be clamoring for any bearish buyers at this point in time. So we have a very simple zone here which we shall be using to guide our trading activity for today, which is confined within the 79 and the $78 area. So depending on how price action reacts to the zone is likely going to be dictating the pace for the later part of this week. So I encourage you to mark out these levels and let's see how the market is going to be reacting to this zone going forward. So I don't know if you have any questions whatsoever as regards to my explanations. If you do, feel free to drop them in the comment section, and trust me, I am here and willing to be of help